Welcome to Behind the Numbers. I'm Greg Heym, Chief Economist at Halstead Property, and today we're going to be looking at the fourth quarter Manhattan residential market. We're coming to you from just off of Central Park West, across the street from the Museum of Natural History at 6th West 77th Street. This pre-war classic six-room home was recently gut renovated and designed by leading architect David Mann. The exquisite home features a living room and two bedrooms overlooking the enchanting museum park. The open flow is perfect for sophisticated entertaining and optimal living. Eloise Johnson, Mike Gepte, and Chris Halstead are the exclusive agents. The Manhattan residential market continued to recover during the fourth quarter. The 2,519 reported sales were 9% more than a year ago. Oddly enough, the fourth quarter also had the most closings out of any quarter during 2009. This is a bit strange, as sales usually peak in the second and third quarter and things slow down at the end of the year. This is really due to two factors. One was the slow start to the spring buying season. The second was the surge in the stock market that began in the second week of March. Although not back to where they were a year ago, prices during the fourth quarter did reach their highest levels since the first quarter of 2009. The average apartment price of $1.3 million was 4% higher than the prior quarter, but still 9% below a year ago. It's important to remember that the collapse of Lehman Brothers and subsequent financial crisis were not reflected in market statistics until the second quarter of this year. That's because it can usually take several months from when a contract is signed for the closing to take place. The median price of $800,000 during the fourth quarter was up 2% from the prior quarter, but still 11% lower than a year ago. The average condo price of $1.7 million during the fourth quarter was up slightly from a year ago. This was helped in large part by an influx of high-end closings, as the number of condo sales over $10 million tripled from a year ago. Many of these closings were at the new development Superior Inc. building downtown. This also helped push the three-bedroom and larger average condo price up 33% during the past year to $4.6 million. Co-op prices averaged just under $991,000 during the fourth quarter, 10% lower than a year ago. This figure was up 6% from the third quarter of 2009, aided by some high-end closings at the end of the year. While all sizes of co-ops posted lower average prices from a year ago, the declines were much smaller for one-bedrooms, where the average price fell 5%, and two-bedrooms, which saw a 9% decline. Some of the most interesting findings during the fourth quarter were in new developments. At an average price of $1,238 per square foot, new developments sold for 5% higher than the previous quarter and just 1% less than a year ago. The number of new development closings rose 10% from the prior quarter, with the majority of the contracts signed for those apartments during 2009. In fact, over 20% of all new development closings during the fourth quarter had their contracts signed during the fourth quarter. This is in stark contrast to the fourth quarter of 2008, where the typical contract for a new development was signed way back in November of 2007. This data proves how active the new development market has become over the past several months. While the average price fell for all sizes of apartments on the east side over the past year, the smallest decline was seen in studios, which fell 12%. Smaller units also fared better on the west side, as the average price fell just 1% for studios and 8% for one-bedrooms. Closings at the Superior Inc. building, a new development, helped bring the downtown average price up for three-bedroom and larger apartments 39% over the past year to $4.7 million. These closings also helped the condo average price per square foot rise 5% from the fourth quarter of 2008. In northern Manhattan, prices rose for two-bedroom apartments while falling for smaller apartments over the past year. Prices were also up for both pre- and post-war co-ops, although down from the fourth quarter of last year for condo units. Recent economic data has showed the continued improvement in the U.S. economy. Job losses have continued to slow, and GDP, the broadest measure of the U.S. economy, grew during the third quarter for the first time in over a year. In New York City, the job losses to date have been much less than forecast. Originally, the mayor's office had predicted 300,000 or more jobs would be lost during the current recession. Two government agencies have recently stated that the actual losses may only be slightly more than half of that. Unemployment in New York City in November was at its lowest level in 5 months. New York City has probably been helped the most by the resurgence of Wall Street, which went from record losses a year ago to a projection of record profits during 2009. And now it's time for Ask the Economist. Juan asked us through Twitter, do you see interest rates going up anytime soon? Well, actually, Juan, interest rates on 30-year mortgages have been rising for the past several weeks, and many do expect them to continue to rise in 2010. The first reason for this is that the government will be removing itself from the more active role it took in the mortgage market over the past year and a half. Secondly, with the government continuing to borrow a lot of money, many are afraid that that will continue to drive up long-term interest rates. It's important to note, however, that while interest rates can rise over the year, they will still remain at historical lows. I don't think anybody expects to see the interest rates of the 80s return anytime soon. Our next question comes to us from Leslie via Facebook, who asks, where will the Dow be at December 31st, 2010? Well, Leslie, I wish I knew, but even if I did, I don't think I'd want to share it with the rest of the world. But thanks for your question. Well, that's it for our show this quarter. If you have a question for the Ask the Economist segment, please email it to behindthenumbers@halstead.com. Thanks for watching, and we'll see you next quarter.